Hi everyone, this is Aki with another tax video going over the most frequently used tax forms, and we're going to go over the forms SSA-1099 Social Security Benefit Form. So this form is issued by Social Security Administration. It's not issued by the IRS, and it contains summary of taxpayer benefits received during the year, and you must report it if you have a filing requirement. And I'll go over with you when you do have a filing requirement or not. Now, it's important to know also that some of the benefits may be taxable, some of it may not. Sometimes you might have zero taxable benefit-wise, 50% or 85% may be taxable. And on the Social Security Administration website, they mentioned that about 40% of beneficiaries have to report their Social Security, and some of it's taxable. So it's important to know that when you do have it, you have to file it with your taxes. But for some taxpayers, especially the ones who just received Social Security benefits, they don't have filing requirement and they don't have to report that. Now, this form also has other information such as, Medicare Part B, C, and D benefits deducted from your Social Security benefits. So that's also important in cases when you itemize. So let's get started. So the form, it's issued to you and you should receive it by January 31st. If you can't, and you have not received it, you can obtain it from the Social Security Administration website. You would have to create an account to do that, to get a copy in case you have not received it. Maybe it was misplaced, you moved, or what have you. Now it has the information on the year for which the form has been issued. Your name would be listed there, and it's important to note that if there's more, if you're filing jointly and both of you receive Social Security benefits, there should be two separate forms received. The address for you, it's right there in box 7. Now the claim number, that's something that you would use, let's say if you want to contact your Social Security Administration, you would refer to this number in box 8. Now box 3 specifies the benefits paid in 2021. Now in rare cases, if box 4 is filled out because there were some benefits repaid to Social Security Administration in the current year for a prior year, it would be listed here, and there would be some information in the description box right here. So it's important to know that sometimes it may apply if something was repaid to you. Now the net benefits in box 5, it's basically box 3 subtracting box 4, but many people don't have anything in box 4, so the box 3 and 5 would be the same. Box 5 is the net benefit for the taxpayer. And this is what basically goes on your tax return if you have to file and figure it out how much of this is taxable. Now it's important to note also that box 6 has withholdings, and there's number of taxpayers that actually do have withholdings from their Social Security because they might have filing requirement and because they might be getting income from other sources. So, they don't have a job anymore. They don't have like a W-2, but maybe they have interest, dividends, stock sales, and retirement income distributions. And so basically it bumps them up into filing requirement and into higher brackets. And so they have tax due at the end of the year. So they prefer to have like withholding. And if you do want to withhold something from your Social Security, you would contact Social Security Administration the first time you are requesting Social Security benefits. After that, if you want to make changes, you have to fill out the form W-4V. Another important thing is, let's just go over this big description box. So this box basically can list more information about what you have in box 3. And let's say if you have Medicare premium B, C, or D, taken out from your benefits, it would be listing it here. And it's important to know that if you're itemizing, and it's about 10% of people itemize right now, then this information would be like your medical, expenses that can go on Schedule A. So it's important to put that in if you're filing your tax returns. Now, another thing that you can still also have in this is any lump sum payments. And that would also be listed right here in the description box for the prior 3 years. So it's important to put that on. Now let's go and maybe evaluate your filing requirement. When do you have to file? Most of the time, it's important to keep in mind whatever is the standard deduction for your filing status and age. And age, then basically that's kind of like can guide you to figure it out if you have to file. On IRS website, there's a tax assistant that you can use to figure it out if you have filing requirement. But for most people, it's whatever is the current standard deduction could be a good guide. For example, single under age 65, if you make gross income is more than $12,550, you have to file. If you're over 65 and single, if you made $14,250, then over that amount that you have to file. So, these are the standard situation, but you might have filing requirement even though, you have income less than that, because maybe you have a gig income, maybe you have some employment income. Even if you made $400 or more from self-employment, you are required to file. So there could be other reasons why you have to file taxes. Now, we're just talking about filing taxes. Now, if you want to know how much of the benefits are taxable, it's basically, there's a calculation on the Social Security Administration website. I'll link that in the video. Basically, the way to calculate if some of your Social Security is taxable is if you take all your income right here, it's right this box, and then add any non-taxable interest plus half your Social Security benefits, and this is your combined income. If the income falls into these categories, then 50 to 85% will be taxable. For example, let's say you're single and you made $10,000 of income and you have a Social Security of $10,000, so you take half of that, that would be $15,000. It will be under the $25,000 to $34,000 amount. Therefore, none of your Social Security will be taxable. So you see, for individuals, if your total combined income per this calculation is between $25,000 to $34,000, 50% of your benefits can be taxable. If it's more than $34,000, 85% of your benefits may be taxable. Now, if you're filing jointly, the calculation is the same. You combine the income for both, plus combine the Social Security and half of it, the combined amount, and this is your combined income. If the combined income is between $32,000 and $44,000, up to 50% can be taxable. If it's above $44,000, up to 85% can be taxable. Now, if you married, filed separately, you actually will have to file, and the benefits will be taxed. So that's unusual situation. So that's something to keep in mind. If you received some benefit for prior year, let's say you filed, you requested, but you didn't receive it in time, and you received it in current year, some of it can be taxable, even though, let's say, it's for prior year. So it's not like you would amend your tax return, like IRS says that you can't amend. But there's calculation that can be done to figure out how much of it would be taxable, and that's something that the software will take care for you. But it's something that you have to be aware that if you receive the SSA-1099 and you have benefits for prior year, you don't put that or amend the prior year and put that there. You actually put it on the current year for which the tax form has been received. So the benefits would be listed here. on this form, and you put that exactly on the tax return for which year you received. And I think that's the main, those are the main things that you have to be aware when you receive this form. And if you want more information, there's a publication, IRS publication 915, that has more information, more detail on some more unusual circumstances. So hopefully this helped you figure it out, if some of the benefits are taxable and how to go about, putting that in on your tax return, whether you have to or not. So thanks so much for watching.